7 days with Lisa Hayes. With the price she pays, you'll be amazed. She's a national
Can I avoid capital gains tax when selling my property? So, what is capital gains tax? First things first, we think it's of utmost importance to make sure we're all on the same page and know exactly what capital gains tax is. The UK government defines capital gains tax as the following. Capital gains tax is a tax on the profit when you sell, or dispose of, something, an asset, that's increased in value. It's the gain you make that's taxed, not the amount of money you receive. Now, let's break that down and take a look at CGT in a little more depth. So, the theory behind capital gains tax is that the money you used to purchase the asset would already have been subject to being taxed at some point. This is why the government only taxes the difference following the sale. Let's look at it in numerical terms. Say that you bought an asset for £15,000 and sold it for £20,000. As a result of this particular sale, you'll have made a profit of £5,000. The government won't tax you for the full £20,000, but instead will tax you for the gain you made, which was £5,000. Hence the term, capital gains. When might I have to pay capital gains tax, and what are the rates likely to be? So, we've covered exactly what capital gains tax is. But when might you have to pay capital gains tax, and what are the rates likely to be? You have to pay capital gains tax on any properties you own that are not your primary home. Under some specific criteria, the government may also request that tax is paid on some people's main homes too. If your home is large, has been let out, or used for business, then it can become difficult to avoid paying capital gains tax on it. As well as this, the capital gains tax rates on the property are higher than asset rates. A person who is considered to be a primary ratepayer will need to pay a 10% capital gains tax rate on all of their assets. This same individual would have to pay 18% capital gains tax rate on all property. There is also a higher additional payer rate in both of these categories. An additional ratepayer will need to give a 20% rate on assets when paying capital gains tax. A higher ratepayer would have to pay a whopping 28% capital gains tax on property. How much will I have to pay in capital gains tax? If you're concerned about how much you might have to pay in capital gains tax, we've got you covered. There are all sorts of capital gains tax on property calculators available online nowadays. All of these calculators use primarily the same formula in order to help you to work out what you have to pay. Before doing anything else, you need to know what your income is. You will either be subject to tax at the basic rate, or the higher additional ratepayer, depending on what your income defines you as. If your income defines you as being a basic ratepayer, you could still make enough on capital gains tax to push you into the category of additional ratepayer. If this is the case, then you'll only pay the 28% tax on the amount that takes you over the limit. We're now going to provide you with a legitimate and helpful method that is often used professionally, in order to help you figure out how much you will need to pay next year. Step 1. First off, alongside figuring out your income, you'll want to factor in any other cash influx you've gained from other sources, such as a pension, for example. The income that you use in order to calculate your capital gains tax should be a combination of all of the revenue you've received over the last year. Once you know your total revenue, you can deduct your tax-free personal allowance. For the sake of this example, we will use an income of £50,000. The tax-free personal allowance is a different thing from the tax-free capital gains tax allowance. Therefore, you must subtract both your tax-free personal allowance and your tax-free capital gains tax allowance from all of the profits you have earned. The tax-free personal allowance for the 2018 to 2019 tax year is £11,850. We know, the figures are similar with the CGT allowance being £11,700, but it's important not to get confused as they are not the same. Step 2. The next step includes subtracting the tax-free personal allowance from your overall income. So, in this particular example, we will be deducting £11,850 from the total of £50,000. This leaves us with a taxable net income of £38,150. After this, you have to add any profits that you've made from capital gains. For the sake of this example, we'll say that you earned £15,000 in capital gains profits throughout the last year. But don't forget, you can subtract the tax-free capital gains tax allowance from the gross capital gains profit. The allowance is £11,700. So in this particular example, you subtract £11,700 from £15,000, which leaves us with £3,300. This £3,300 profit is the amount that is subject to being charged for capital gains taxes. Next, you'll want to add the sum of £3,300 to the net taxable income of £38,150. This will give you the total payable amount, which in this example comes to £41,450. Step 3. This is the third and final step. Remember that the high rate threshold in the UK is £46,350. The individual in our particular example would therefore be subject to tax of 20%. All you need to do in order to work out the exact figure is to multiply the total amount of gross income by the tax rate. The answer to this is how much you'll owe in taxes. So, in this example, £46,350 times by 20% comes to the amount of £9,270. This is therefore the sum that this individual would owe for the tax year. Does that make sense? Thanks for watching. Don't forget to like and subscribe.
If you're trying to sell but it's not going well, if you can't get a sale and the estate agent fell, now is the time for you to jump and praise. 7 days with Lisa Hayes, where the price she pays, you'll be amazed. She's a national cash buyer, and she'll pay you much higher today.